Hello guys and welcome to Hakman Traders. In this video I'm going to be showing to you why does a company get listed on the stock market. What is the reason behind a company getting listed on the stock market? Now when a company get listed it issues its shares to the public and which will be traded on the stock market, and the company will benefit from it. Now I'll be showing to you how it benefits in later in this video. Up till that, stay tuned. So as a company is getting listed, it announces that the company announces that it will get listed on the stock market, so the investors are getting ready to purchase the shares, and the trading starts in the um, while the company gets listed on the stock market. Well, that's happened after some paperwork. The company gets regulated or something like that, and that happens after that. So the company gets if the company has good reputation, it's performing well, performance is rising, so the company will so the share price of the company will rise as well, and it will rise much more if the performance more is much more than other companies. So it will so the share price of the company will rise. When the company gets listed on the stock market, buying and selling happens. Trading happens in the stocks. Some people buy the stocks, some people sell the stocks. Most of the investors mm, place long position in the stock, on that company, to and they wait for the share price to rise and sell that share on a much more price on which they have purchased. So the so so that is so that's what happened when the company gets listed in the stock market. Many of the buying and selling happens after the company gets listed, and after some time, when the company is listed, after some time, then the real trading happens. So most of them buys the stocks, some of them sell the stocks, some of them short their position, some of them long their position. So that's what happened after the companies gets it. Now the shareholders cannot rule the company in this way, because the company has listed its shares, its stocks, to the public. So it does not they own a piece of the company, but they do not cannot rule that company. Yeah, there are certain types of shares. What I think those are physical shares, which the shareholders have the rights to vote for the director, or something like vote for the heads of that, have the right to vote. So those are the shares that the company to the provide rights for them to vote against someone or vote in favor of someone in that company. So they have the rights. The only the only people who will rule the company are the partners and the owners, who made the company who made the company the first time. They will be they are the ones who will be owning the company. The shareholders on the other side, the stockholders, the shareholders, they own a piece of the company. They do not own the whole company. They own a piece of the company, which they might own it up till some time, or maybe much more time. The much more time. So shareholders own only a piece of company. Let's say there is a company issues 1000 sorry 1000 shares, and you buy one share. So you're 1 by 1000 owner of that company. Let me explain it to you this way. Let's say company A issues 1000 shares. Now let's say you own one share. Own So you're the owner of the company of 1 by 1000 shares. So that is how it works. So there are a lot of other investors as well, who are going to own the company. So a stock market works like this. They issues those shares, and those shares they issue those shares, and which will be traded by the investors, by the buyers and the sellers, to make benefit. So the company benefits from by investing in the stock market in this way, that before getting listed on the stock market, a company, if it has lower capital, it will apply for the apply request the bank or apply to the bank for loan. So to run its and to run its what do you call it, to run the company, to run the different systems in the company, so it will apply for a loan. But by getting listed on the stock market, usually what happens that that the company, that the investors invest sorry, the public invest in that company, and the company uses that money to run the company, and to invest that money further to run the business, to grow the business. So usually that, so the company benefits, instead of getting a loan from the bank, they benefit from that money which the investors have invested with them. So that's all about investing in the that so sorry so that's all about getting a company getting listed on the stock market. And that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I need you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.